company's market cap is over 70 lakh crores. 50,000 crore is not even 1% of that.
Exactly.
So this is sheer, I think, disinterest and completely giving up.
Let me just stop you for a moment, because Siddharth has another guest joining us. Sanjiv Bajaj, Chairman and Managing Director, Bajaj Finserv, joins us. Siddharth.
Sanjiv, welcome to India today. Your key takeaway, solid, no controversies, no shocks, no surprises, and the best possible outcome in an interim budget in recent memory. Sanjiv, is that how you would read it?
So I was enjoying hearing the conversation prior to me joining, but yes, I look at this as a balanced budget, keeping in mind that it's a vote on account. It continues on the public sector capex spends, and as we can see, I think that's higher by about 11% or so. It is a socially inclusive budget. We know that's important for a country like India, and it's something that this current government has been pursuing as well. And at the same time, the government is showing that they are following the fiscal prudence path that they laid out a few years ago. I don't think you can ask for more at this point of time. Of course, the next budget that comes up with the new government, we hope for that to lay out the path, as I think both the Prime Minister mentioned and the FM prior to that, in line with the goal towards Amrit Kal. I hope we will see some significant more announcements at that time.
Will the burden continue to be on the government when it comes to infrastructure development and so many other areas? Because the question in government that is asked and sometimes not said publicly is, where is the private sector? Why is it not coming forward now that the big banking cleanup has also been done by the Modi government?
So that's a very fair question. Governments cannot keep funding capex for a country, and a country as large and one with the kind of opportunity that India has. And yet there are moments in time where, for multiple factors, the private sector is not able to come up to speed. And we have seen the external uncertainties that we are facing, even and continue to face. Look at where the rest of the globe is. Look at what happened from the pandemic and just the amount of time it takes to get back to speed. End of the day, private sector will invest when there is sufficient demand and capacity utilization has taken place, because eventually that capital that we raise, we have to go and pay that back as well. Government has greater leeway, and I must say this government has taken the bull by its horn and said that yes, we will step in when required. We are already starting to see some signs. Some of the early sectors, basic raw materials, we are seeing in housing, construction, we are seeing capex, good production. Some of these sectors which are used by other industries to propel their growth, we are seeing new investment in the last 4 to 6 quarters coming there. And I'm hopeful that as our economy continues to chug along at the current pace, and we do not see any significant negatives externally, that you will, in the next 4 to 6 quarters, start seeing more and more industries announce their own private new capex.
But do you see domestic demand also growing? I mean, this has been a question over the last few years. Earlier it was suggested because of COVID, demand was subdued, but we are now 2 years out of COVID, and there is still no dramatic rise, Sanjiv, in demand. So, what is it that's going to trigger greater domestic demand and consumption?
Post-COVID, the initial spurt in demand we saw was because of the kind of money that came into people's hands, what the government did and the benefits towards that. We then saw some amount of slowing in that demand, and this is because overall growth was still not moving. Now, on the back of 3 years of very strong capex on the public side, we can see a multiplier effect start to happen more so in urban India when it comes to growth. Rural India is still soft at this point of time. The last monsoon was not great. Plus, I believe that a lot of the subsidies that were increased during the COVID period, as those have been brought down understandably, it has taken some money away from people's hands. So yes, so let's hope that we have another good monsoon. That is important for us. And as I mentioned, if our external situation remains reasonably controlled, I can't say it's suddenly going to disappear, but if it does, I think you will start seeing demand, especially on the consumer side initially, start off in India. And that's very important. We need more jobs because those jobs are then going to create demand for the future.
Saurav here.
just to add to what you're saying, there is a view also that given the global headwinds, the uncertainties in the global market for Indian corporates, and the fact that, like you just mentioned, rural demand still continues to be soft. Do you see the government having to continue for another couple of years or about 2 or 3 years this whole heavy lifting of public capital expenditure?
Very difficult to say that because, I can also see as a concern for the government, their interest payments is now nearly, 39% of their receipts. So that's not a position that they would want to be for a long period of time as well. So really what you're asking me to do is to look into a crystal ball and tell you what the economy is going to look like going forward. I think at this point of time it's anybody's guess. I cannot say that I can see a clear path ahead that's a 8% growth path, but neither do I see one that's 5%, for example.
Niranjan, you want a final word before you leave us? Are you as bullish in the short term?
I wanted to answer Saurabh that I see a 10 to 15% growth in the housing sector. If the interest rates comes down, which I think Sanjiv will be able to guide us maybe better, I would tell you that if the interest rates come down by 1.5%, the affordable housing growth will shift from 2% growth to 10 to 12% growth. So actually the affordable housing sector is...
I don't know, that's an excellent point, and Mr. Rajiv Kumar here said not happening, but Sanjiv, the question to you, has the government's announcement today created the circumstances for the Reserve Bank of India to start perhaps earlier than expected a reversal of the interest rate hike cycle? Will interest rates and the cost of money for housing, for example, go down?
One, I do believe, and as we can see also in the last couple of months, that rates seem to have peaked. You have to say seem to have because the situation still continues to be uncertain externally. Second, Fed has, as you know, held rates. There is a significant expectation of rate cuts in the US through 24. So it's a matter of when rather than if. And yes, with today's announcement on the greater fiscal prudence, a path that the government as a FM had chalked out 3 years ago, it will create greater confidence. What happens next week, we'll have to wait and watch.
Has North Block created better circumstances for Mint Street next week, the point that Sanjiv is hinting towards? Does Shaktikanta Das now have lesser pressure from North Block on account of the conservative numbers, lesser borrowing?
I think so. The fiscal consolidation path that they are following, it's not a loose fiscal policy that's been now announced in this budget. So, but I don't see an imminent reduction in interest rates by this MPC or even the next one. I see the reduction coming in the second half of this year.
Your view on this point?
In my sense, the RBI's interest rate policy was not really too much dependent or guided by the fiscal deficit. It was more about the situation in the economy in general, and since the inflation is what they target, though in my judgment the inflation in India is primarily on the food and agricultural side, not the real core inflation. So they had guided that, that was what was guiding. So the reduction in fiscal deficit to 5.1% for the next year is not going to be a very material factor. What is the larger factor which is being hinted? There is a global downturn trend in inflation, and accordingly the Fed and other will start declining or reducing the interest rate now. And in our situation also, maybe couple of months down the line, we will see the reduction. But incidentally, that has a very poor effect on the banking stocks. Because today, the housing interest rate is all linked to virtually the repo rate. So if repo rate goes down, the housing rate goes down, and the margins of the banks squeeze.
But the overall impact of a lower interest rate, and therefore a spur, or therefore a boost to the housing sector, is very good for the economy. So the housing has a huge number of backward linkages. And I think, therefore, I wish what Mr. Hiranandani was saying will happen. But I don't see a 150 basis point reduction in interest rates. Maximum, I would say, in year 24, about 75 basis points reduction in interest rates going forward.
Can I though just ask the risk factor? Because those in industry are often reluctant to look at potential risks ahead, but especially on budget day. Sanjiv, you're still with us. Do you see any major risk factors going ahead in the next 4 months? It appears at the moment, speaking to those in corporate India and industry, they've discounted the 2024 elections. They too seem to believe that the Modi government is in pole position to get re-elected. But are there other risk factors there? Is there a sense that that could change things between now and July, since July seems to be the next big date?
Other than the political risk, I think just the risk of an escalation in war, the risk and the impact on that. Let's keep in mind, last couple of years, our oil prices, and as a result of that, our inflation has stayed in good control. It's also declined on the CPI side, as we can see. So to me, that can be a risk if externalities go out of hand. Second is that, yes, if we see uncertainty, and at some point of time, the government cannot continue to keep funding our own growth. Private sector has to step in. And for the reasons we all understand, the private sector, you have to respect capital. So private sector will step in only when they see a reasonable amount of certainty. So to me, these are associated risks which are real. It's at the back of our mind. I don't see them as very high risks at this point of time, but they do exist.
So, in my judgment,
yes,
political risk may not be that, but the real risk to their profitability in the corporate sector is the capex. There is a 50,000 rupees reduction in the current year's capex from 10 to about 9.5, and the next year's growth is also smaller than what it is expected. If that doesn't get delivered, if there is a reduction in the capex going forward for whatever reason, that to my mind is a bigger risk to the corporate profitability.
But interesting, Siddharth, and this is been the major takeaway from today's budget, is the sense of confidence that the government seems to have of re-election. We've been comparing it to 2019 and the period between February and May of 2019. Do you believe that at least over the next 4 or 5 months, people will wait to see what happens in May, irrespective of this seeming inevitability that of a re-election, and then take their choices post that, wait to see what happens in the July budget? This will be a pause period. A number of big ticket projects will be on